Welcome back, and today I'm going to show you how you can buy an income property inside a self-directed IRA, individual retirement account. So welcome back. So let me share my screen and let's dive right in. How to use a self-directed IRA to buy income property. I'm going to share with you a step-by-step guide to invest in real estate through your retirement account. And a lot of people just are not aware of this. Not only rookie investors, but savvy investors also are not aware this is possible. Anyway, I'm one of the very few real estate gurus nationwide who knows about self-directed IRA. Most real estate gurus are, pretty much a marketing expert, right? They know how to talk a good game, buy real estate, different kind of real estate, whatever, and they'll do a very good job. But they just don't know enough about buy inside self-directed IRA. So, I dive very, very deep. I have a passion. I understand taxes, although I'm not a tax advisor. Consult your own tax advisor, of course. But yeah, I've been doing this risk consulting to help people buy income property, regular financing, investment loans, to buy multiple properties and out-of-state properties, cash flows, in many very good out-of-state markets. So anyway, over the past 20 years, I have guided hundreds of risk investors with buy rentals, including buying rentals inside the self-directed IRA. So, yep, this is one of my passion, and I could promise you one thing: it doesn't matter whether you are a newbie, a rookie investor, or you're a savvy investor, 5 years, 10 years into it. I can guide you along. I could turn any rookie investors as long as you have the motivation, as long as you have the capital and everything else, you're willing to learn. I can help you walk through. You don't need years of study to learn about investing inside IRA, with your real estate. It's just you learn by doing. You learn in the trenches through my specific mentorship and guidance, and I have done it numerous times very successfully. It's not that hard. Not only that, we have the real estate markets for you to dive into, right? We have a network of uh, turnkey providers in the various growth markets in the country that can help you buy great turnkey cash flow properties in those markets. And we have property management. We just have the tools and resources to help you. It's a one-stop shop. It's an umbrella. So to learn more about it, contact me and go through my YouTube channel, go through my website, and connect with me directly. I can clearly, easily help you through. You learn by doing. Okay, I mean, so a lot of people they study about self-directed IRA for weeks and months and years and never get to do it because they just don't have any trusted advisor, trusted gurus, trusted mentor, and coach to help them maneuver the intricacies of buying real estate inside an IRA. And as far as I know, I'm the very few of the gurus out there in the country, anywhere that have this unique understanding to help investors to take action, execute on their action plans. So anyway, that's the fact. All right, so step one is understand the self-directed IRA. A self-directed IRA allows you to invest in alternative assets, okay, outside Wall Street. Most people look, Wall Street has been brainwashing, stock market investors for years. They think only you could only buy mutual funds and stocks and bonds inside and through the Wall Street stock market, through what we call it, the mainstream marketplace. And they call it anything other than mutual funds and stocks and bonds, a alternative asset. Invest in Investing in real estate inside an IRA, I don't consider that a alternative asset, quote unquote, but I call this is a mainstream investment methodology that you can do it inside or outside an IRA. All right, so I'm here to diffuse any brainwashing, conditioning, and manipulation by Wall Street. They want to keep Wall Street investors inside the IRA, which is trillions and trillions of dollars, right? We all know that. They want to keep it inside Wall Street so those commission brokers, financial advisors get paid. They get paid by managing those trillions of assets inside a stock market IRA. So any investors that are smart enough to get out of the stock market IRA to buy income property inside the IRA, they don't want that because when the money are being transferred out of the Wall Street, those commission salespeople, they don't get paid a 1% under management or whatever fee they get paid to keep you, like uh, uh, uninformed, if you will. So a lot of brainwash manipulation. I'm not gonna get into that. Let's continue with this, okay? So anyway, so yeah, you can use your self-directed IRA to buy not only hard assets, income property, you can buy land, commercial, private lending, notes, cryptos, everything, right? As long as it's an investment opportunity, then you could use your self-directed IRA. Now, traditional IRA, self-directed IRA is a tax deferred growth. There's a lot of tax benefit. Yeah, you don't get any kind of depreciation or bonus depreciation or cost segregation. You get none of that, but you're already invested inside the IRA. It has a special tax treatment, which is just as good as buying outside the IRA. Okay, you can also buy in using a Roth self-directed IRA to buy income property. You can achieve tax-free wealth at every step of the way, which is amazing. Not enough people are doing the Roth self-directed IRA. Anyway, step two is the open account with a qualified custodian. Trust me, those Wall Street types, they're not going to give you any access or to a qualified custodian. You need a qualified custodian to invest your inside your income property inside your IRA. And some examples that I've used that are Equity Trust, Entrust Group, Avanda IRA, and U Direct IRA. So I know these companies for many, many years, so you can use them. All right. So the custodian's role is to hold the IRA assets. They execute the property transaction and they will ensure IRS compliance. Okay, so step three is to fund the self-directed IRA. The way to fund your self-directed IRA is you roll over your existing IRA, right? You roll over your existing stock market IRA, that is, okay? And a lot of those financial advisors that are managing this portfolio, they're not going to like it. They're going to say, "Oh, you can't do that. It's illegal or it's unethical. Don't do that because I want to earn fees to manage your. That's my livelihood. If you take the money out of the stock market where I'm managing, I'm going to go broke. I can't maintain my occupation. Too bad, right? If you can earn higher return through an income property inside the self-directed IRA, by all means, you care about yourself, your personal goals to create your wealth. Who cares about this third-party consultants, if you will, that does very, very little and receive a lot of transactional fees by so-called managing your stock market, Wall Street IRA, whatever, right? You know what I'm talking about. Okay, I'm not here to bash Wall Street. Well, maybe I am. Anyway, so you can also transfer your old 401k. You can also use your new annual contributions to fund your self-directed IRA. The tip is most investors fund via a rollover from an old retirement account. Yes, a lot of investors, they have three or four or five IRA accounts, one with Fidelity, one with Charles Schwab, one with Dreyfus, one with whatever. They all clutter, all disorganized, five, six, seven different IRA accounts. You see, it's very disorganized. And a lot of investors, they can't even keep track of how many different IRA from different accounts. So you guys, investors out there, you need to organize your finances and just focus on, make your money work hard. Uh, anyway, All right, step 4 is identify and purchase the property. I know there's so many ways to buy investment property. I could only share with you, within my network, the year real estate network, the kind of property we have. We are promoting through various markets in Texas, Florida, Oklahoma, and Alabama, and New York. So, some of the markets that we help people buy turnkey cash flow properties, and you can do the same thing using your self-directed IRA. And we have the one-stop shop. We can help you do all those things for you. All right. We have the tools available. We have the self-directed IRA custodians available. We have the non-recourse lenders available to help you within our network, so you don't have to waste time and effort and whatever to get out in the marketplace and do it yourself. Right. We have done most of the work for you. Isn't that cool? Anyway, step 4 is identify and purchase the property. Once the paperwork is funded, you can direct your custodian to purchase the said property. Of course, you have to follow the rules, which is not so hard. The rules are, the IRA is the owner, right? The title of the property is for example, is a custodian, is an equity trust, then equity trust FBO. FBO means for the benefit of whatever your name is, John Smith IRA, account number, da da da. This is the name of the account holder of the income property, not you, right? Okay, not you as a physical person. The IRA is the owner. Okay, you find through the name of the IRA. So as a result, when you use your IRA to buy income property, you don't have to show your FICO score. You don't have to show your W-2 tax return, right? Right? Because this is kind of weird, isn't it? Most of the time when you buy income property, yeah, you have to qualify with a Fannie Mae lending guideline, 25% down payment, regular financing. You have to have proper credit score. You have to have debt to income ratio, everything else under your name, good credit score, 750 credit score, whatever. You have to show your tax return for the last 2 years, the whole 9 yards, right? But when you buy inside an IRA, it's a whole different ball game. Okay, the IRA is the entity that's holding the property, right? You don't have to go through all the crap of using your name to qualify W-2 tax return, credit score, or the whole 9 yards. No, right? It's a very, very different situation. So you have to really think very differently when you start using your self-directed IRA to buy income property. All right. So I just want to make this point. So the rules are, again, you purchase the funds, all purchase funds and expenses must come from the IRA. All income goes back into the IRA. All the income, all the cash flow, all the depreciation are rolled back into the IRA once you're buying an income property inside your IRA. Does that make sense? Step 5 is follow prohibited transaction rules, right? And avoid, quote, self-dealing, end quote, for personal benefit. These qualified persons include, you, spouse, parents, children, grandchildren, any entities you control. Avoid this. Another prohibited situation is you cannot live in or using the property on a personal basis, and you must, it's an income property, right? It's rental property, and you cannot pay your expenses of your property inside the IRA on a personal checking account, nothing like that, right? That's a prohibited transaction. And also you cannot hire yourself or your company to do the management. The third-party property management is the best clean way to run your income property inside the IRA. Does it make sense? And step 6 is manage income and expenses properly. All income expenses must flow through the IRA. So do have rent deposit in the IRA, and if your property management is managing your property management will facilitate all that. They get the 8% fee of the rent fee, then whatever remaining, they will wire the rent in your IRA, so your IRA can pay all the expenses inside the property, such as taxes, insurance, property management fee, maintenance, upkeep, vacancies, all that stuff. The IRA, the custodian and the IRA would do all those paperwork transactions. You don't have to do all the minutia of this kind of things, right? You just delegate and outsource all those things to the third party to do everything for you, right? So you have time freedom, and then you could make your job optional at some point in time when you own a lot of these rental properties inside and outside of the IRA. Does that make sense? Okay, so one more thing, don't deposit rent into your personal account, of course. You cannot commingle. You cannot mix personal with investment accounts inside the IRA. Yeah, you cannot pay expenses personally. You cannot reimburse yourself. All right. So step 7 is consider financing options. Now, I don't want to get too deep, too technical, but most people, not most, I don't know, 50 to 70% of the people buying rental property inside the IRA, they buy with all cash, which is, fine, with nothing wrong with that. But some of you, they, there's a technical strategy many of you should explore, which, by the way, obviously, I have done a whole bunch of this transaction over several decades, right? So many of you, you have the ability to use your IRA. You can borrow against the IRA, leverage against the IRA, really, to get a non-recourse loan. So you can buy more property with less IRAs, but you get a non-recourse loan. The rules are you cannot personally guarantee the loan, and only property serve as a collateral. And so, yeah, I mean, I'll show you a sample momentarily. So just don't overthink, what I'm teaching you right now. It's just it'll come to you once, and if you are analyze your situation, if you want to use your IRA to buy income property, I'll help you. I'll walk you through. It's not that complicated. It's a lot of paperwork. It's a paperwork shuffle, okay? The rest, myself and my team can help you, go through the technical situations, but it's not that hard. So the rule, non-recourse loan is a tremendous way to leverage your IRA, just like buying an income property outside an IRA. You do 25% down payment or whatever, right? To finance the income property. So you're using leverage. Same way, when you use your leverage to buy rental real estate, you're gonna get higher return because less of your money come out of pocket, right? You're leveraging through a lender, through a loan. So you by using a loan, you can use leverage to buy more real estate and get higher returns, right? And same thing with a non-recourse loan, all right? So I'll tell you the parameters, don't worry. Okay, the rules are you cannot personally guarantee the loan, the non-recourse loan. Only property serve as collateral. You may be subject to some debt finance portion that may be subject to unified UBIT tax. Okay, this sounds very, very technical, but the cash flow that comes out of the portion of the debt financing, the non-recourse loan, whatever it is, if it is 50%, whatever cash flow income you accumulate from the non-recourse loan portion of the cash flow, you have to pay potentially debt finance unified UBIT taxes, which is not that substantial. Okay, that's not a deal breaker. I will give you more details about that. So I highly recommend to use your IRA and your non-recourse loan to buy income property, so you could put less money down from the IRA and buy more property, the value wise. Does that make sense? Hopefully I'm not confusing you. If I am, of course, we can talk one-on-one and I'll explain everything to you. So it's not that bad. It's not that complicated. All right, step 8 is enjoy the tax advantages. I know, sometimes you guys ask, if I use an IRA to buy a hard asset, a rental property, I mean, how come I'm not getting cost segregation or depreciation or bonus depreciation, all these fancy tax terminologies that I've been educating on about. But don't worry about it because when you buy an IRA inside income property, the whole amount, the whole strategy is tax deferred anyway, right? So you don't really need, so therefore, self-directed IRA does not factor in with the, depreciation and write-off, because the IRA itself inherently is a write-off per the IRS rules and regulations, right? So don't worry about that, right? So, and besides, any kind of earnings you achieve from your rental property inside the IRA is not reportable on your federal tax return unless it's time for you to withdraw the rental income inside your IRA at age 59 and a half. Then you potentially pay your ordinary taxation on the amount of the withdrawal. If it is a traditional self-directed IRA, if it is a Roth IRA, if you own the Roth IRA for 5 years or more, is a after-tax contribution, tax-free growth after 5 years inside a Roth, and a tax-free withdrawal regardless of age. Doesn't have to be, you don't have to wait until age 59 and a half. But it's not that easy to convert your traditional IRA into a Roth IRA. But I don't have time to talk about that. But yeah, so if you could find a way to convert your traditional IRA into a Roth IRA, that'll help you, but requires a lot of planning and education and strategy. So consult with your tax advisor, early on to determine how you could convert your traditional IRA into a Roth IRA. So in the future, you don't pay any taxes on the withdrawal of the IRA or liquidation of the IRA if you have a Roth IRA. Does that make sense? All right, so let's continue. So again, traditional IRA is a tax deferral growth. You don't pay taxes on the rental income inside a rental property inside self-directed IRA. Isn't it amazing? And appreciation, right? It's a paper appreciation, no taxes on the growth component of it. Amazing, amazing tax strategy. You only pay ordinary tax when you withdraw the rental income at retirement for most people at age 59 and a half or older, with the exception of Roth IRA, right? Like I told you, right? You don't have to wait until 59 and a half. As long as you own the Roth for 5 years or more, everything's a tax-free withdrawal. Imagine on a Roth IRA, when you withdraw the Roth at age 52, 55, or 58, doesn't have to be 59 and a half, and you don't pay taxes on the amount of withdrawal if you own a Roth IRA inside your rental property. Even if you're many people in the high income earners, even at retirement, because they have so much income at retirement at age 60, at age 65, they are in a 37% federal tax bracket. If you withdraw your income, your rental income at retirement inside a Roth IRA inside the rental property, yeah, you don't have to pay taxes on the withdrawal. Isn't that amazing? And Roth IRA, you don't have to pay RMD, required minimum distribution, RMD. I know I'm getting pretty deep in this matter, but just from a high level, again, continue to get educated, and then, of course, consult a competent tax advisor who understand real estate. Of course, we have those kind of resources and tools available for you as well. All right, so let's continue. All right, I know I'm going kind of fast, but hey, look, when you play the video again, you can pause the screenshot on this slideshow and digest, each screenshot, so you could the second and third time, and finally it may click. But at the end of the day, you don't have to learn too much longer, because going through my mentorship and guidance, you can take action, and you learn by doing, right? Take action based on your goals and objectives and what have you. All right. All right, so step 9 is, well, what if you sell the property? There's a lot of people get very, very confused in this area, but let's dive deeper into it. When you sell your rental property inside a self-directed IRA, all the proceeds return to the IRA. There are no capital gains tax as long as you reinvest the profits into another property or within the IRA. And this maintains the ongoing tax deferral or tax-free growth. That means you have the ability from, if you have one or more rental property inside the IRA. The rental property could be a single family home, duplex, triplex, fourplex, commercial, whatever, right? I mean, you could always, just like any other, just like a regular investor, right? I mean, if you find a better opportunity in some other housing market where your money can work harder, you can sell your rental property inside your existing self-directed IRA and move the proceeds into another rental property at another location for whatever purpose you have in mind based on your goals and not pay any taxes on the liquidation of that asset inside the self-directed IRA. Isn't that cool? Wow, a lot of people don't know that. Oh my goodness. Okay, information you're getting from me right now is so powerful. I bet you whether you are a newbie investor or investor doing it for 5 to 10 years, I bet you a lot of information I've been telling you are you are not aware of it, is it? Let me know, okay? Let me know on your comment whether you're hearing this kind of information for the first time. I bet you many of you heard this kind of powerful information for the first time. You see, you've been I don't know how to say it. You've been manipulated. You've been misinformed because nobody told you about this kind of amazing investment methodology within a self-directed IRA. Okay, summary checklist. So again, you open a SDIRA with a qualified custodian. You fund the money with a rollover, a contribution. It's all paperwork. It takes a few weeks to do that. Choose and buy an IRA, a property through IRA. Of course, you can buy all kind of different kind of rental properties, right? There's so many ways to invest in real estate. But hey, we have our ways. We specialize in turnkey properties, 1 to 4 units, cash flow, turnkey property, mostly new construction in the fast growth markets in Texas and Florida and Alabama and in Oklahoma and in New York. So yeah, so we have a great turnkey team available in those markets. Anyway, so then you choose, you buy a property, then you avoid, self-dealing, prohibited transactions. The property manager we have, they send you all the income and expenses into your IRA. So you just, I highly encourage you to use non-recourse financing inside your IRA so you can stretch your property to buy more properties with the financing. Enjoy tax advantages. And you can sell and reinvest if you choose, or you can keep the property for a long time to go, and then live off the appreciation, tax-free, tax deferral appreciation of your property and tax-free growth of your rental cash flow income. Okay, do you clearly understand the words that come out of my mouth? Okay, so the key takeaway is self-directed IRA unlock powerful real estate investment potential with strict IRS rules and massive tax benefit. Traditional IRA give you tax deferral, right? No taxes. You don't have to report it on the federal tax return, right? If you have the wherewithal to convert some or all of your traditional IRA into Roth, early on in your career, the better, because everything afterward become tax-free, as I mentioned earlier. Of course, stay compliant and protect your IRA status. Consult with your tax advisor. This is one of my non-recourse lender that we have. We have several, okay? And this is a sample property in Buffalo, New York, where you can buy $67,000 property, all cash purchase with your IRA, and then pay some closing costs. And then with the rent, it's at like 825K. You minus your expenses. At the end of the day, you're gonna achieve net monthly positive cash flow of almost $500, which is uh, so this cash flow is not reportable, right? You roll this cash flow back inside the IRA. You don't pay taxes at all throughout the year, right? You don't need to file your tax return. So consequently, if your cash flow annually is almost 6,000 and you put in $70,000 of to purchase this property with your IRA, then your total return at the end of the first year is already 11%, which is pretty cool, right? Higher than the stock market on a consistent annual basis historically. I would say so. All right. This is just one sample. Another sample by, a newer property, in our other markets in Alabama, Oklahoma, wherever. But this is just a generic pro forma. This one using your non-recourse loan. So therefore, let's say you identify a $250,000 property. You want to use your non-recourse loan, so you put 50% down payment. There are some rules against it as to how much is the down payment, what's a percentage versus what's a percentage of non-recourse loan. I'm not going to get into the technical issues, everything I'm sharing with you from a high level. So you put 50% down payment, 50% of 245K of the full purchase of the single family home rental in Alabama, wherever. So your down payment is 122,000 IRA plus closing costs. Your total out of pocket is 126K. You use a non-recourse loan to finance this purchase. The other 50%, okay, you pay whatever interest rate, 6-7%. So at the end of the day, you collect the rent of 1875. You minus your typical monthly expenses, taxes, insurance, property management fee, whatever, maintenance, and then your mortgage payment from the non-recourse loan is $737. So your total net operating income is 1461, minus your non-recourse loan monthly payment is 737, and your expenses here, right? This number right here, you still have a positive cash flow of $724. Okay, and this positive cash flow, this is tax deferral. You roll this cash flow back into the IRA the following month, right? And keep growing your portfolio inside the IRA, no tax reporting until and unless you withdraw your cash flow at retirement at age 59 and a half or older, and then you pay your ordinary taxation on the amount of the withdrawal, which most people do anyway, unless you own a, uh, uh, a Roth IRA. All right, so that's how you grow before you appreciation, tax deferral, uh, 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 cash flow, tax deferral, the whole nine yards. So everything is is just inside the IRA. So you know uh, owning uh, instead of owning a IRA inside mutual funds or stocks or bonds or crypto or whatever, you inside this IRA, you're owning a hard assets. A little bit additional requirements, but it's not rocket science, right? I mean, it's hundreds of my investors have done it through my network over the years, which I personally facilitate them because I'm a mentor and a coach, whatever. I mean, it's not really that hard. It's a lot of paperwork shuffle, but you learn by doing, okay? Don't waste your time for years and years and years. Try to get the proper education. At the end of the day, like most people, analysis paralysis, never take action. So but in this case, since you're leveraging this IRA through the power of non-recourse loan, right, through the power of leverage, just like any other leverage, so your total return on investment at the end of the first year is already 18%. Okay, you gather up the annual net cash flow tax-free, you gather up the principal reduction, the tenant going to pay down your non-recourse loan. You have a 5% appreciation at the end of the first year is already 12 grand. So you at the end of the first year, just the first year, okay? Beyond the first year, you can get a lot more return. So your almost $9,000 of annual net cash flow plus principal reduction plus first year appreciation of 5% equal $22,400 of gross equity income divided by your down payment 126,000 equals 18% total ROI at the end of the first year because you use the power of leverage. Okay, the non-recourse loan, once again, your renter, he's paying this gross rent, gonna pay down this non-recourse loan for you for the next 10, 15, 20 years, whatever. Yeah, then your non-recourse loan gonna be paid off, then if you own this property long term, then you're gonna have no more debt. So you have more rental income to come out of this particular property because your renter is paying off your non-recourse loan over the years. See how powerful the using non-recourse loan. So get yourself educated. All right. So again, another situation similar. I'm not going to go through the pro forma over here, but just go through the numbers yourself, and same way I just taught you. All right. So let's continue. Again, selling a property inside the IRA, which I already mentioned, right? Nothing wrong with that because there's a lot of opportunities all over the country. There are many rental properties. There are many different type of real estate asset classes you could carry over. Again, you could hold your property for many, many years and do nothing and let the appreciation and rental income continue to grow inside the IRA. Or, you can sell your IRA, you can sell your property inside the IRA to move into another IRA, and you don't pay there's no tax consequences. So let me give you a scenario. Rental property purchase inside the IRA. 5 years later, the property value has increased. What happened if you sell the property? Okay, the IRA owns the property, not you personally. All the rent and sales proceeds flow back inside the IRA. All property expenses must be paid by the IRA, right? Traditional self-directed IRA at the time of sale to buy another better property, buy a fourplex, or buy a commercial property or multi-unit, whatever, storage unit, any other income producing rental property, you can do that. At the time of sale, if you sell your initial property inside the IRA, no capital gains, no depreciation recapture tax. The proceeds stay inside the IRA, growing tax deferred at withdrawal at age 59 and a half, with withdrawal of the rental income. Then you pay ordinary taxation like most people do anyway, typically at age 59 and a half, right? For example, if you buy a single family home today, for example, for 200K inside the IRA, right? In 5, 6, 7 years, whatever, your the value of your property increased to 300K. So you have gained 100 grand, right? Inside the IRA, your rental property, there are no taxes now. Your taxes, you pay taxes later when you withdraw the rental income. Okay? So a little bit different with the Roth IRA if you're lucky enough. At the sale of the Roth IRA, no capital gains, no capital recapture tax, no taxes ever if you hold the Roth IRA at least 5 years. Okay, and then once you retire, you can withdraw the rental income of your rental property inside the Roth IRA. You don't have to wait until age 59 and a half. As long as you hold it for only 5 years, you can withdraw the money without any penalty. There's no early withdrawal penalty, a 10% early withdrawal penalty, right, associated with the Roth IRA. Okay, so just pay the order. I mean, and no ordinary taxation either when you withdraw your cash flow to retire, right? So all growth and profit along the way are tax free in a Roth IRA. Wow, isn't that powerful? Again, let's talk a little bit more about the if you use leverage, use non-recourse loan, which I alluded to earlier. All right, so if the IRA uses non-recourse loan, a portion of the gains from the finance amount is called UDFI, UDFI, unrelated debt finance income. That UDFI is subject to UBIT, unrelated business income tax, which is not that significant, especially when you buy a property for 200, 300 grand. Okay, you use 50% down payment on the IRA. If you receive annual income coming from the debt finance portion, let's say 5,000, you pay the UBIT tax, a couple of $100. Don't quote me, okay? It's not a significant, it's not a red flag, but consult your tax advisor, right? And they will break down the tax return before you file your next year's tax return, and they will share with you how much is the UBIT taxes from income earned from the finance component of your self-directed IRA purchase. Okay, so example, 50% of the property is financed. The other 50% is gain tax at the trust tax rate, which is the unified amount. Okay, common pitfalls: avoid using prohibited transactions. I discussed already about that. Personally paying property expenses, no. Using the property for personal purposes, no. Consequences your IRA could be disqualified, then the entire IRA could become taxable if the IRS catch you with the prohibited transaction. But stay compliant, which is not hard, right? We have teams available to help you to maintain compliance. No big deal. Okay, so summary, IRAs, traditional IRA, Roth IRA, use your leverage, prohibited transaction. And then the key takeaway is traditional IRA inside the rental properties, tax deferral growth, amazing. Roth IRA tax-free growth in the front end and the back end. The power of leverage, non-recourse loan, very, very powerful. A lot of people are not aware you can do this, but I'm telling you, it is possible. This kind of strategy has been around for 50 to 60 years. Imagine that, right? Everything I've taught you been around since 1973. The ERISA, ERISA Tax Act, major tax changes back then, 1973. Then, of course, 1986, there's a Tax Reform Act of 1986. There are a lot of tax changes, but a lot of it benefit you as a real estate investor if you know what you're doing. Okay, the next step is consult with your CPA or your custodian who are familiar with the self-directed IRA. We have all those resources within our entity, within our network. So you come to me, we'll talk to me. I'll give you all the resources. So my whole team can guide you. Our CPA, our custodian, myself as a mentor can help you. We work as a team to help you purchase a lot of real estate inside your IRA and outside your IRA for that matter, right? So ensure property ownership and transactions stay compliant. Consider future strategy, reinvest or convert traditional into IRA if it makes sense to you. Self-directed IRA, powerful but require precision. And of course, so we have a network that can help you. We got a lot of properties to present, but here's my contact information, which is right here. Okay, so that's pretty much it. So with that said, thank you so much. Hopefully this is another educational upgrade for you. So just learning and doing, incorporate finance your property using regular financing, using your name to grow your portfolio, buying different markets, buying cash flow markets, okay? And then use your self-directed IRA, which most people are not aware of, whether you're newbies or savvy investors. A lot of people don't know how to use a self-directed IRA, including a non-recourse loan to leverage to grow your future so you can achieve generational wealth for yourself and your family. So stay consistent, buy for the long term, surround yourself with a great team, buy the right kind of property in the right housing markets, and then invest for the long term and stay the course. And in the next 10, 20, 30 years, you're going to achieve amazing wealth beyond your imagination. All right. Thank you so much for watching and listening. I'll see you next time. Have a nice day. Bye-bye.